Hi there, Trace. This is Brad Gilbert with the Daily Market Insight for Monday, the 25th of October. All right, we're charging through to the towards the end of the year. Now, the dollar, I think we're in a really sort of mixed position. Now, we saw the US Treasury yields go through the roof there about a week ago. Now they've pulled back all week. They've stabilized, and now they're starting to come back again. So really sort of waiting to see what relationship with the various markets. I was going to say, like, what relationship with equities, but also with the currencies and mainly the US dollar, what impact that has. Now, for those who are just joining us new, okay, the general relationship, if the US Treasury yields go up, the dollar rallies, right? And we've had an inverse relationship for whatever reason. Okay, there's various factors. The fact could be that the market just got so caught up long dollars and that it just sort of flipped. Now we're waiting to see what happens here. Now the Treasury, US Treasury bonds have the yields have gone up a little bit. Okay, equity futures just to start the week in Asia, US equity futures are up, and we're seeing a slight risk on day, right? So the dollar block rallies and the dollar pairs fall, with the dollar yen being the odd one out there. So, but just have a look, just wait to see how this plays out, because it's quite interesting. And if I just show you the charts, I've just overlaid the US 10-year on the Euro, Sterling, Aussie, and Kiwi, just to give you a bit of a visual idea of how this relationship's working, right? To me, now you can see, you know, this correlation sort of comes in and out here and there, but overall, okay, the US 10-year yields, right, they are matching or driving the price action, right? So opposite to what you would generally expect. So, and we're starting to get some really nice price action or price history almost, right? All this work here in the Euro, Sterling's doing some. We've got trend lines all over the place. We've got really nice shape on a lot of these pairs. I mean, even dollar CAD for that matter. So we've got the structure, we've got trade history there, we've got really good price action, we've got trend lines. We're ready to start trading. Now, one thing I would be sort of looking at and going, well, okay, so if this relationship stands up, right? So if the yields, US bond yields continue to increase, Euro, Sterling, Aussie, and Kiwi should rally, right? Well, if the yields start to fall, right? Well, we could see these pairs break down. Now, the easiest way to do that is if you come over here to the bonds, is actually go and chart. So the US 10 years, okay, that's what we're sort of focusing on at this point. You may be looking at the 20, the 30, the 5, the 1, whatever you're looking at. But the fact is, we've got a trend line here. And if this Treasury yield breaks down through that, that's the point where you could be selling Euro, Sterling, Aussie, Kiwi, right? It may not necessarily be those separate instruments breaking levels. If the bond yields are the catalyst, well, it makes sense to sell those pairs when the US Treasury yields break down through that support trend line, right? So that's something to keep an eye on as we go through the week. Now, of course, that correlation relationship, you want to make sure it's in place again before you start doing something like that. But it's a good starting point to get your week started. Now, other things, I mean, dollar CAD is doing a lot of work down here around 123.5. Okay, oil still holding in there, $84.5, but we are seeing pretty good volatility in the oil price. Okay, so just be aware, dollar CAD's going to flip around on the back of that. Now, this is a good point where you come back and start to think, well, okay, we've got some great setups. We can see what's going on with the the relationship with the yields and the dollar block, okay, and the dollar pairs. Right, that's the direct relationship. Usually you're getting that from the equity markets, but we don't have to wait for that. That relationship's coming straight from the bonds. So we've got that. Now it's time to overlay what's coming out, right? We're trying to work out which of the pairs to hit and when, right? And that's when the calendar comes into play. So once again, just coming back and looking at FX Street here, right? We've got, now there's not a lot happening on Monday, okay, generally, but if you are around and you're up during that European session, check out the IFO business numbers, right? This is a good historical number that has a bit of weighting and it sort of covers the whole or the impact will be across the whole Eurozone, right? Because obviously Germany is the main economy over there. So keep an eye on that for Monday. To me, it's the standout number. You want to keep an eye on these couple of bond auctions out of the States. But right now, I'd say if you had to look for something, I'd be watching Euro and the Euro crosses on these numbers, right? Stronger numbers, you get the Euro rallying a little bit. Weaker numbers, it drifts off. So it'd be good to see exactly where that market is sitting. Now, coming into Tuesday, now there's not a lot coming out, but we are in the last week of the month, right? For those traders who aren't aware, there's no massive, big impacting macroeconomic numbers, right? But we do have a couple of central banks coming up with some with their details, and there is some good peripheral numbers, right? You're coming into Wednesday's trading. We've got Aussie CPI numbers. Okay, that's usually a solid number. We've got US durable goods, another decent number to be being released. Keep an eye on what impact it has on the dollar. But Wednesday should really be dominated by the CAD, right? The Bank of Canada meeting, interest rate decision, statement. We want to find out what they're thinking. There's also the press conference afterwards as well. So that's a different trading event. So don't fall in love with your position on the actual release of the information of the statement, because they're going to come out and have a press conference afterwards, and that's where things can change. So Wednesday, you're looking at the CAD and CAD crosses for sure, right? Don't forget, when you are looking at CAD, think of the Bank of Canada, and also think about what's going on with oil as well. Now, the Bank of Japan, all the central bank meetings are highlighted. Don't get excited about that. They haven't done anything for years. I can't see them doing anything just at the moment. But you come into Thursday's trading, and we do have a good round of data coming out here on the euro, right? German numbers, euro numbers, consumer confidence, industrial sentiment, unemployment numbers as well, CPI numbers. So you've got to be thinking Thursday, great day to be looking at euro. And once again, the euro crosses, they are going to be all in play. Then you come back down to that North American session. So following up all the European numbers, we've got a round of, good second tier US numbers, I was going to say. I think I did actually forget to mention obviously the ECB, in amongst all that data coming out. We'll get the statement. We'll find out exactly what they're thinking with regards rates. There's no changes expected, but we may get some deadlines or some future dates around their policy changes. I was going to say the press conference as well, same as the Bank of Canada, right? You get some information here, can start driving the euro either up or down, depending on what they've said. When you come back to the press conference, you want to make sure you're close to the screens or out of the position, because that's when it can change. If there's no change, then you get back into the position. I mean, there's a lot of risk management you can do. You can over manage it, but generally speaking, if I'm not in front of the screens, I'm a little bit cautious. If anything, if my position is in the cash, I would be looking to lower that stop loss to break even at the very least, or maybe even move it in the cash, like a nice trailing stop. Then you come into Friday, not a lot coming out immediately. We've got the pending home sales on Thursday afternoon in the US. Then we come down to Friday. There's private sector credit numbers and producer price numbers in Australia, not that big, not that important. Retail sales is a bit of a kicker though. That could sort of give the market some flavor, give them something to think about. Excuse me. German GDP numbers for sure. Now there's usually not much variance in the German numbers, but I tell you what, you'd be kicking yourself if you didn't have a look. If you did have the time available to look at the markets, and then obviously following those German numbers, excuse me, an hour and a half later, you get the Eurozone numbers, CPI, as well as GDP. Right, a couple of kickers there. You're looking for sort of clear direction. Is that economy growing or not? Would be good to see. And then you got some PCE price index numbers here as well coming out of the US. Now they are a sort of good directional number. Canadian GDP numbers and the Michigan consumer sentiment numbers there as well. So basically, we're actually gearing up for next week's non-farm payrolls and the start of a new month. The fact is, we have the Bank of Canada on Wednesday. We've got the Euro ECB on Thursday. They're the two major, big, high-impacting events. Around that, we've got some peripheral numbers, sort of second-tier numbers that could really add some flavour to particularly the euro and also the US dollar. So it's shaping up pretty good, because sometimes when we do have non-farm payrolls coming out on Friday, it can dominate the whole week and the market gets unsettled. It doesn't get into a some rhythm, and then you miss the whole week, right? But this week coming up, we've got a few things to lead in. Really kicks off obviously on Wednesday, as I was saying, with the Bank of Canada. But there's numbers coming out here and there all over the place on different pairs, which is also good. So hopefully we start to get some flavor and we'll see what's actually going on. Now, US numbers are really going to be sort of more involved with what happens on the US bonds, US equities. So, you know what, there's a chance this week for the Canadian, Euro, Sterling, Aussie, Kiwi. I don't think there's much Kiwi data out, but the rest of those pairs, there's bits and pieces coming out to really give you a chance to hit something else, right? So most importantly on Monday, right, don't get yourself all sort of worked up and sort of start thinking, okay, I'm going to sell this, I'm going to buy that. No, let the market decide for you what you're going to be doing. Just start to experiment, either overlaying the US 10 years here on your charts, whether it's Euro, Sterling, Aussie, Kiwi. Maybe it works for one, maybe it works for all of them. Okay, let's just work it out. Keep an eye on obviously dollar CAD. That's going to be something you're going to get more focused on as you come into Wednesday's trading in Asia and Europe. Then we've got the Bank of Canada on Wednesday, obviously. And then obviously Thursday, the ECB, Euro is going to be in play. And then you've got bits and pieces coming out here and there. Most importantly, keep an eye on obviously your risk management. It's the fourth week. It's a little bit looser. We're looking at bonds and seeing what's going on there. We'll know by sort of Tuesday what that relationship, if it's breaking down or if it's still standing tall. Right now, it is a tick. We're seeing the equities go up, treasury yields go up, and the dollar block go up, right? So keep an eye on that. It's not usual, but it is a starting point for us to start to really get tuned up for the week. And that's pretty much it. All right, guys, good luck. All the best. Cheerio.